Well, good afternoon, everybody. I see we've got a number of people joining, so we'll give people a sort of a minute to join. So thank you for joining in what's a lovely sunny day outside to hear about the near prime landscape, as we've titled the webinar, Defaults, Deposits and Demand. So I'd like to sort of welcome the panel. So we have Richard Harrison, Head of Mortgages from Atom Bank, Rachel Geddes, Strategic Lender Relationship Director of MAB, and David Hollingworth, Associate Director Communications of L&C Mortgages. A couple of things before I introduce the panel and then let them just explain sort of their roles. So there are going to be some polls throughout this webinar. So we're going to do 3 polls throughout this webinar. So please participate in the polls and answer honestly. And then the second thing is, if you want to ask the panel any questions, please do so. There are tips at the bottom of the screen there, so please follow those instructions, ask any questions, and I'll get to them sort of as and when we go through the webinar. So Richard, Rachel, David, thank you for joining. Can I just go around the houses in terms of just to introduce yourselves, and then we'll get stuck in. Richard first.
Yeah, good afternoon, everyone. Richard Harrison, Head of Mortgages at Atom Bank. I'm primarily responsible for designing Atom's residential mortgage proposition. So keen interest in this area of market, and yeah, keen to have a good debate on how it's changing.
Rachel.
Good afternoon. Yes, so Strategic Lender Relationship Director for MAB. My main job is working with all of our lender partners to support our firms, our brokers, to help more clients on their house journey, whether that's getting onto the ladder or throughout the journey, as well as still being a broker and running a brokerage within London. Thanks,
Rachel. David.
Hi everyone, David Hollingworth at L&C Mortgages. I'm Associate Director there. My day-to-day is largely spent fending off journalists and their inquiries, but like commentating on what's going on in the market, looking to kind of reflect what our brokers are seeing day to day and how they're helping customers get on the ladder, remortgage, or invest in buy-to-let.
Thanks, David. And for, I suppose I shouldn't sort of tell people who I am as well. So I'm Paul Hunt. I'm the co-founder of Square One Media, a public relations agency working in this sector. So to kick things off, Richard, so Atom Bank have recently launched their latest iteration of the sort of near prime sort of index. So can you give sort of a brief overview of sort of the near prime range as it is that you offer as a bank for anybody that's not familiar with it?
Yeah, of course. Thanks, Paul. So yeah, Atom's near prime proposition in the broadest sense aims to support customers who aren't typically well served by mainstream lenders. To bring that to life a little bit, as sort of the key customer group we define as rehabilitators. That comes out in the near prime index, but these are customers who are recovering from past financial mishaps like CCJs or defaults, but they are currently up to date with active credit commitments. So we've got a generous criteria set for historic defaults and CCJs that looks to really support these customers' progression back into a prime product in the future. That said, we're seeing increasing support being given to first-time buyers who fall outside of the mainstream lending criteria. That could be for a couple of reasons, either a thin credit file or minor adverse credit performance. But we're seeing more and more interest in our proposition from this group of customers as well. More broadly, some USPs that Atom can offer through our near prime proposition. Well, we use the same levels of automation as we do for our prime proposition. And what that does is gives great speed and certainty for brokers and customers. So roughly about 20 to 25% of our near prime offers are made on the same day. And another key selling point of our proposition is our approach to product maturity. So after the initial near prime product matures, it's our objective to offer customers who have improved to a level, we'll get them back onto a prime product and share the benefits of a long, loyal sort of customer relationship. So those are the key things that I would draw to your attention at this stage, and more detail to come as we progress through the call.
Thanks, Richard. And obviously, yeah, we're going to start off with sort of from a first-time buyer perspective, and near prime seems to be helping more and more people sort of recover from past issues. So, why, from a first-time buyer perspective, is near prime so important from a proposition? So, David, sort of first to you.
Yeah, well, the report's really interesting on this. I think there'll be lots of people on this call comfortable with the idea of rehabilitating those who have run into problems along the way and looking to get them back into the mainstream. But perhaps we don't always associate that so much with first-time buyers. And actually, what the report picks out is that those people who are just starting out on their mortgage journey are a key part of the sector where near prime can really help. So I think it's those people who think they can't do stuff that actually there's more solutions out there, and the near prime product is a great example of how it could be an option to get a first-time buyer onto the ladder a bit more quickly than they perhaps think. And they may be very much in rehabilitation mode themselves, when actually they could be starting their journey much sooner.
And Rachel, thank you, David. And Rachel, there's a press release out today about from MAB about first-time buyers. So so I'm sure you can sort of provide some extra meat on that.
Yeah, definitely. So I think everyone's aware, without first-time buyers, our market comes to a halt very quickly. So we do need this first-time buyer market to be in a position where they're comfortable and confident in what they're doing. And back to Dave's point, what you don't know at the end of the day. The report that Atoms put out regarding like 59% of their first-time buyers have some form of near prime. That's quite a large number, and probably larger than most people were anticipating. And we've seen that in the same polls we've been doing. A lot of this is down to education awareness of actually our first-time buyers not being aware of the impact this could have on their mortgage, and therefore then thinking that they can't proceed because there's myths from historical that if you're a first-time buyer, you can't do it if you've got any blemishes on your credit file. So there is so many options needed because so many clients need to be doing this. We know that over half of clients in the ready to move this year that are first-time buyers, but they don't think it's possible because of things like their credit files or near prime and non-prime issues. So it is really important for everybody that's on this today to be looking at this area and really taking a bit of accountability of how aware of the clients that they're speaking to and their situations, and how can they help them move into the ladder.
Thank you, Rachel. And Richard, in terms of, so I know the report sort of included some sort of customer profiles, sort of rehabs and starters. So how can lenders like Atom help sort of better serve such customer groups?
Yeah, we're constantly challenging ourselves to service more customers, really. But I think an element is, credit scoring is a really helpful tool for many lenders, and it does bring some great customer benefits. But I think there can be an over-reliance from some of the mainstream lenders on credit score. So the index highlights there's an estimated 5 million people who are credit invisible or have thin files with the bureau. So that's not to say that these customers aren't credit worthy. It's just that they've not necessarily had enough credit products that justify and create a sort of a high score. So I think it's trying to look beyond a one-size-fits-all approach and looking at the nuance to some of the customer profiles within this area of the market. So within our first-time buyer populations, we sort of see two cohorts. One is this sort of credit invisible, so low credit score through lack of exposure. We look to get over that and look through that and service that area of the market. And then there is an element where first-time buyers have had a really challenging time of it for a prolonged period now. So cost of living has made it more difficult to save for a deposit. Inevitably, that has led to some credit challenges, whether that's just missed payments, and they then fall foul of not having a high enough credit score because of some small indiscretions. So again, we're trying to sort of reposition near prime. It's not the sort of heavy adverse that may have been present in the non-standard market maybe 20 years ago. It is looking for the niches within the customer population that are creditworthy and deserve access to home ownership and competitive mortgage finance. So I think that's a key area that we're utilising technology to help us over a simple yes/no credit score binary model.
Yeah, no, thank you. And yeah, and I suppose there's sort of the misconception that sort of near prime is just sort of people with with adverse credit. There's also people with very thin sort of credit files, and sort of Rachel, I'll come to you first, and then David, and then Rich, in terms of what do you how can you help those types of customers where so it's not necessarily an adverse credit issue, it's just the fact that their credit file is quite sparse?
Definitely, and it's kind of, you can't do right for doing wrong here. So if you've not really taken out any credit, you're getting penalised because you've not built a credit file. But if you've taken out too much credit, you've been penalised. If you've had any misjudgment on that credit file, again, you've been implicated here. So I think it's actually, when do you get in contact with that client? We have been in an industry that's kind of, in a lot of cases, waited for clients to start looking to buy a property or thinking they're in a position to buy a property to approach a broker, to approach a bank, where actually, how can we start educating? From a first-time buyer point of view, it's become the norm that first-time buyers are mid to late 30s across the country. Actually, how do we bring that back into the mid-20s? Again, it's that education piece. We've got to speak to clients before they even think of buying a property or getting on the ladder, so they know what's available, what's possible. I really love what Richard was saying regarding the invisible credit file sort of thing, because, and what else that they're looking to do, as well as other lenders as well, is actually taking into account why have things happened, or why is that client in that situation? Because there's so many things that a client's done that shows that they can manage a monthly payment plan, that they can make the mortgage payments, but we need to give that opportunity to them. And it's not just adverse, it's everything from potentially the credit file itself, but it could also be the first-time buyers need usually a higher loan to value, but they might have different income streams, and it's also, they might have visas. There's lots of different things that need to be taken into account here. And we've got a lot of historical rules in this industry that need to be reevaluated, because our first-time buyer today is not the same as it was not even 3 years ago, never mind the rules of 15, 20 years ago that we're seeing still in the industry.
Yeah, no, absolutely. And David, so what, so from your experience and dealing with sort of hundreds of borrowers that come into sort of L&C, what's, how do you approach such customers?
Yeah, I think this is where advisors almost have to conduct a bit of detective work in some cases. So I think the starting point will often be, and it depends on whether the borrower understands whether it's going to be difficult or not. So quite often they'll be coming in saying, what's the best deal I can get? At that point, it might be the disappointment of the decline on a dip, or just finding that they're not hitting the points that they thought they would. And that could be that they've just really been focused on trying to get a deposit together. We talked a lot around the problems that face first-time buyers, and deposit's one of the key ones. What they're really focused on is trying not to saddle themselves with other forms of credit. So that's where you can hit that problem with the credit score in terms of thin file. So what I think we often see with near prime use, that they may have started with a mainstream lender, had some disappointment there, and then the advisor is able to tease out what the key issues are. So whether that is blips along the way, or whether it is a credit scoring issue, the lenders are increasingly looking at, can we offer something that will actually, for those people who don't quite hit the higher LTV score that we would normally desire, are there other options we can do? But if it's beyond that, that's where you start shifting out of mainstream. You might start looking at the near prime. We often see that journey for those kind of customers as they end up with near prime products. But that ultimately gets them where they want to, and perhaps at a price that is lower than they had anticipated.
Yeah, no, I understand. And Richard, as a lender, how did and obviously the technology that you use as well, how does that sort of help sort of from that, assessing those types of borrowers and getting the right results for them?
Yeah, well, as I say, I think we have a reduced reliance on credit scores, and we'll look to evaluate and sort of lean on data that can maybe assess income stability. Low levels of indebtedness may offset the fact that they haven't got a strong credit record, or they haven't got a debt to service as well. So just try to take a rounded view of it. But then also, I suppose, our automation allows us to give the certainty around a quick decision. So we're not going through an arduous sort of manual underwriting process for 2 or 3 weeks to ultimately maybe not give the customer what they want, which is a key piece of feedback we consistently get from customers and brokers, that it's a really stressful sort of period of time trying to get on the housing ladder, and uncertainty through the application process is obviously not welcome by borrowers. So we're really quick to give certainty to borrowers as well, and trying to use a bit of extra sophistication to see through some of the issues that come from a lower credit score.
No, thank you. I had an interesting question actually coming in. Sort of my ignorance, I wasn't really aware of this, but there's a credit boost facility that some credit reference agencies are now starting to offer. Is that of help at all? I'll ask sort of Rachel and then David, and obviously Richard, from you as a lender. Are you seeing that utilised more, Rachel, David?
Absolutely. I think this has also come along from actually looking at, can we take rental payments into account for actually building the credit file, but also looking at the affordability. So this is actually what started the conversations about these a few years ago now. And then you've got the credit boosters there, which do give you a boost if you are conducting a certain way, if you're engaging with it. And a lot of mainstream lenders have actually started looking at this and using it as their internal credit scoring too. So it's definitely something that can be done there. Again, though, how many people are aware of it, that this is available? So unless they've actually signed up to one of the companies that are doing credit boost, they're not going to be aware of it. And again, that's where the advisors can play a role to support them if it is that they need to be in that position they need a bit of a boost. But again, going back to Richard's a second ago, this is where lenders need to look at things differently. Is actually, it's great, we've got the credit boost, and we want more and more companies doing things like that, and more lenders looking at it and taking it into consideration. But actually, what can our lender partners be doing to actually just look at a client and actually change how they assess a credit scoring, how they take the credit file into account, and so on? What actually do they need to look at? How many questions are asked and flags are put on things that don't actually impact the client's ability to make the payments on that mortgage?
Yeah, that's so. David, are you seeing more of this sort of being used by customers, having more awareness of this facility?
Well, I mean, it's massively important that credit reference agencies are trying to fill out those files, where first-time buyers are struggling. So Credit Boost is exactly focused on that. It's trying to give renters the ability, they're making big payments each and every month. Why would that not be something that a lender should be able to examine more easily from the file report? How widespread that's being used is I just don't know at the moment. I think lenders will be able to see it where it is, but I think this is where credit reference agencies play a part. So do lenders, and of course we as brokers will, in terms of the education of customers around what they can do before they start the journey, and then as they get into that house buying situation, what are the options from lenders that can help them along the way?
Thanks. And Richard, so your view on on this potential sort of opportunity to help borrowers?
Yeah, obviously, any sort of advancements in being able to assess more holistically a customer is welcome. Yeah, I think we're doing a pretty good job of that at Atom as it is today, but I think it will become more widely adopted, especially with the FCA's intentions around being more flexible and supporting first-time buyers more. So, yeah, hopefully we'll see lender engagement increase. And yeah, I guess it's breaking down some of the historical compounding factors that maybe impact first-time buyers the most. So typically, I'd like a high LTV product, but to qualify for that, I'm going to, need the highest credit score. Well, I haven't been active in credit for that long, so I haven't got that. So then I need a bigger deposit, and I'm having a challenge saving for that bigger deposit, all sort of leading to, a sort of higher bar of entry for prospective borrowers. So yeah, anything to help break those down is going to be welcome. And yeah, greater lender adoption will drive competition and drive access to, and better outcomes for customers. So yeah, certainly all for the industry moving on sort of collectively on that side of things.
Fab, thank you. And John, who asked that question, thank you for posting that question. That was a great one. Deposit size, we've touched upon that on a couple of the sort of responses you guys have sort of given. Obviously, for first-time buyers, that's an important consideration, in terms of LTV. The report, the recent near prime report said that 3/4 of brokers think there are not enough options above 80% LTV, especially in this space. That's sort of David. So first, why do we think that's the case?
I think it's what Richard's already touched on about, a lender's taking the right approach in terms of, and it's about finding the right niches, isn't it? So this is near prime, we're just stepping beyond mainstream, whereas rapidly you can be looking at products that are designed for heavier adverse, which naturally start to depress the LTV available. And if we're asking for more products, then of course customers must be as well. And when we're looking at everything that's been done around first-time buyers and everything we talk about, deposit and affordability are never far away. So if we can translate that through into near prime products and get that message across to borrowers, that's where we will start to see more people coming sooner to take advantage of those products and ultimately get themselves back into the mainstream. But deposit has to be crucial. If we're talking about those thin files and first-time buyers that are struggling, then of course we're going to still be talking about deposit and affordability.
Absolutely. So Rachel?
Yeah, I think it's putting the jigsaw back together though, because deposit gets such a focus on it, because when we say first-time buyer, they've got a small deposit, and lenders have got better and better at potentially higher LTVs. We've seen a lot more change in the market in the last 12 months. However, the area that's gapping is as soon as you put non or near prime into it. So if there is any blemishes, if there's a low credit file, minimum income requirements, visas, income structures, all these different things, who are our first time buyers today if we're looking at that? And what do they need? So deposit is going to play a huge part for any first time buyer, but I'd say anybody in the home journey at the moment, because property prices have increased, deposit requirements have increased, cost of living's increased. So it's always the biggest kind of question is what deposit do I need? Actually, this is where the lender landscape needs to really look at it and go, actually, how do we do high LTVs for first time buyers, and not just maybe take one element of near prime, but actually look at a whole clientele, a whole group of individuals that are our first time buyers today, and what could tomorrow's first time buyers look like, and make that work. Because that's where we find brokers, like I know when I'm speaking to our brokers, they're like, yeah, it's great, we've got high LTV products, but these are our clients, this is their incomes, this is their circumstances, and actually it's great we've moved into that higher LTV barrier. However, we now need to look at the next things. What else do those clients need? What do those clients look like? And build the propositions around that. And it's again going back to what I said earlier, is how many times is proposition built based on what we want a first time buyer to look like, or what we had first-time buyers looking like in our mind several years ago versus that of today and tomorrow.
Yeah, no, absolutely. And so, Richard, from from your perspective, and Atom's perspective, deposit size, and and I suppose whether people have got thin credit files or they've got a bit of adverse, how does the bank approach that?
Yeah, well, we've seen increased sort of interest from first-time buyers, and I think key to that was the introduction of our 90% LTV option within our near prime range. So that's been in the market for about a year, and it's proved to be one of our most popular products. So I think it just shows the underlying level of pent-up demand, really, from customers who aren't super prime, sort of in really strong earning jobs, and who have had a faultless credit history. That demand is there, and we're really pleased actually with being able to offer that product. But at the same time, the sort of profile of customers that are coming through. So again, I think it's trying to be clear from when you sit on a lender trying to design a proposition, being really clear on who you're going to target this product at, and then ensuring that you're offering a fair price and fair access, and all within sort of responsible lending requirements. So we think we're doing that, and a really pleasing aspect is we're seeing actually fairly small level of default coming through and a small value of default. So I think it's just highlighting that the cost of living pressures that everyone's lived through over the past years actually is caused a stress cash flow issue, rather than an outright I can't service my debt. A lot of it is small indiscretions, oversight, a utility bill. So we're really pleased to be able to not prevent sort of access to mortgage finance for those cohort of customers. So that's a really pleasing aspect of what we've seen over the last sort of 12 months. Same time, it is hard to save for a deposit. So again, we've looked at that and become very flexible on the source of the gifted deposit. So we allow gifted deposits from non-family members, for example, and just have appropriate levels of sort of assurance around it, that won't, it is a gift, it won't be called in at a later date, and we're happy to progress on that. And again, that's an area that's been really well received by brokers and customers. So we'll continue to try and look at the key challenges customers face and offer a solution to customers.
Fab, thank you. Just to remind everybody that the first poll is live, so follow the instructions where it said the quick tips. And the first poll is: have you seen over the last year more or less customers with either adverse credit and or who fail traditional credit scores? So if you can please vote, and then Sophie will close that in the next sort of 10 minutes, and then we'll open up the next one. So I was going to go on to, and we've touched upon it on the sort of last response about cost of living, which those issues don't seem to be going away anytime soon, let's be honest. So are we still thinking that's sort of one of the main sort of drivers for, I suppose, the increase of borrowers needing a sort of a near prime solution, David?
Yeah, well, look, we seem to have lurched from one thing to the next, and it's ongoing at the moment. Base rate held today, but different scenarios talked about which could see interest rates rising further, just at the point in time that we were hoping that borrowers could look forward to lower interest rates. And now, again, we're having to tell them mortgage rates have gone up. You might be looking at a different scenario than we thought even a couple of months ago. But even before that, high inflation pushed energy costs up. Could be more to come on that, or very likely to be more to come on that. So it's no real surprise, I guess, that cost of living pressure is going to result in people falling into the odd bit of difficulty along the way. And that's only likely to continue, I think. We are now firmly in a higher interest rate environment than many have been used to for so long. We've got a whole generation who thought base rate would be 0.1 or below 0.5%. Now clearly we're normalizing. But it's up and down along the way and a bumpy ride for those borrowers. So we are going to see people coming who have been hit with issues along the way, but not necessarily, really severe problems. And to be turning those people away just feels very, very sad, I think. So near prime actually is something that I think is only going to grow. And as Richard said, as you get more lenders looking at that sector and being able to pin down what their options and their propositions should look like, it will be easier to help inform customers of exactly what should be available to them.
Yeah, and Rachel, in terms of what your guys are, seeing, is cost of living still still a significant part of the conversation that have, whether that's for people that are buying or people that are remortgaging.
Absolutely. So I think it's hitting both sides quite significantly. And we did actually have a period of time in the media where they actually stopped using the wording for a while, and then late February we kind of knew it was going to come back with some force. So if you kind of look at the client side of things first and foremost, just look at the cost of living, your first time buyers, everything, whether it's from your everyday living costs to buying the property costs, so from removal firms to your connections, your broadbands, everything, your gas, electricity, it's all gone up. And you've then got, for your remortgage clients, you've got two areas of clients coming out. Those that are going on to payment shock, so they were the sub 2% rates, and they're now coming out at much higher rates. And then you've actually got the other side of the coin, though, those clients that maybe were post that little budget we never talk about, that are actually coming into lower rates. One thing though that's kind of always overlooked when we're talking about cost of living is how accessible though debt is. And if you look at it, especially if you kind of bring it back to, like, say, a first-time buyer, you can now order Domino's with Klarna. Like, at what point do we put regulation rules in place regarding this? Like, it's a £20 pizza and you're putting it on 3 months installments. We are opening the doors for more debt and more problems, because actually is that client aware that by doing that they are putting themselves potentially in a risk of missing a payment on that because they're not aware of the rules, and actually that's going to have a detrimental impact on them getting a mortgage. So it goes back to cost of living is definitely playing a part in it. However, there needs to be a conversation regarding how accessible debt is we talk about, and we started off really at the beginning, we're going like invisible credit. How many 20-year-olds are getting notifications through their social media of credit cards, store cards, Klarna payments, all this? Something to be made too accessible. However, we've made getting a mortgage not as accessible as it should be. And I think there needs to be a bigger look at this and what's actually going on, and an educational piece on exactly that. And actually helping people budget. If we look at first-time buyers, but also home movers and remortgages, how often do people actually want to sit down and do a budget plan and actually look at where they're spending their money and what is it that they're actually spending, and how many subscriptions do they have that they're not even using? This is where a broker comes into their own, and actually by giving that advice and looking at all these areas with them, I think the everyday client is kind of got used to everything's more expensive. But it does then lead to them sometimes going, well, I'll just do it because everything's more expensive. And that can then lead to this like tumbleweed effect of people having debts, having defaults, and getting themselves into an affordability situation where it no longer works on the calculators.
Yeah, no, absolutely. And we've touched upon it sort of before, in terms of education and awareness, people don't know what they don't know sometimes. And, and how do we help, whether that's people that have already got mortgages, they've had mortgages. This is not just about first-time buyers. This is sort of general sort of population. And so, Richard, in terms of sort of as a bank and that sort of educational elements, what sort of your sort of views on how whose job is to actually help raise the awareness and make sure people do have the awareness.
Yeah, I mean, I think everyone's got a role to play in that, Paul. I guess from from the very start, should it form part of the school curriculum in some form? Quite possibly. So I think there's more to be done at every stage. I mean, I can talk most powerfully about what we do at Atom in this regard. So, as I say, I talked earlier that a key objective of our proposition is to help transition near prime borrowers onto a prime product through their time with Atom. So we're proactive. So we'll try and monitor customers' performance on their mortgage, but also their other credit commitments and accounts through time, and we'll be proactive in contacting customers if something we spot is going awry, just to try and help them manage their full sort of credit, the basket of credit products that they may have, to try and help them at that point of maturity for us to be able to offer them a prime product. So that's a bit of nudge theory, I guess, just trying to get customers to do the right thing on an ongoing basis and get into better habits. And in addition to that, we'll be communicating with customers more generally through the website and through our app. But I think as I say, there's more to be done at every stage, from lender point of view, but from customers as well, sort of absorbing the information that is available, and then brokers as well, trying to wake up a population that may be able to access a mortgage who, through various reasons, may think they can't. So I think there's bits of the journey that can help customers more generally.
Thank you. And David, someone that talks to sort of national journalists on a sort of regular basis, what's the, I suppose, from a media perspective, how much more of a role can sort of the media play in terms of helping with that awareness, and maybe less traditional sources of media as well, I suppose, especially when we're trying to get after first-time buyers?
Yeah, I was going to say, if for brokers to play a part, there's all sorts of different ways of reaching an audience now. Obviously, within the kind of tight guardrails that financial promotions brings, but social media can get these kind of messages out really quite effectively. I think credit reference agencies do a good job of saying, look, you can access your file, you can see what's on that, and more customers are aware of that. The good question earlier on Credit Boost, it's becoming aware of those kind of things that you can start really quite early down the line, but brokers potentially can help bring that to bear in customer conversations as well, or information they've got online or that they're promoting through social media. So there's various parts to the puzzle. I think things like buy now, pay later that Rachel mentioned, there is clearly more use of that now. Do customers realise that that's increasingly being reflected on their credit file? And if so, would they use it in quite such a volume that perhaps they do? All those kind of tips and tricks can be the kind of thing that a broker can start building into conversations really early, or even before that person becomes a customer.
Yeah, so, and then Rachel, in terms of obviously MAB's experience and all the advisors sort of around the country, they'll see, I suppose, a lot of different types of borrowers with different levels of awareness and knowledge of things. So, what do you see?
So it's definitely, you've got to cater for every client that's within your ecosystem, and that's where what an area that MAB's really been focusing on. So back to what David was saying, like social media has to play a huge part in this for maybe our first time buyers and maybe our home movers as well, and even some of our remortgage clients. The main journalists that are running out there, they need to do better at maybe hints and tips and actually showing this, because even if the first time buyers looking at, their parent might be reading that still and saying, are you aware of this? But also, like, we've not been quiet about what we've built in our app side of things regarding having apps that actually give these guides that explain to whether you're a first time buyer, home mover, a remortgage client, what's going on, and actually supporting that, because a broker always will have the best intention to do and stay in contact with the client regarding what's going on and the changes. However, this year, like every other year, has proven things happen that we don't expect, and brokers will firefight and will adapt. Where with the apps, we found that's been really, really helpful. It keeps that communication ongoing. It's kind of like a push to nurture, we call it, where regardless of whether you're first-time buyer, buy-to-let landlord, remortgage home mover, there's an app where it's speaking to you about what's going on in the market, things to be aware of, those hints and tricks that David was alluding to. It's actually putting it out there. Obviously, we've got a job with all of our agencies, our letting agents, but also our branches and our brokers to keep on promoting that, and whether that's getting it out on social media and so on. But you've got to be able to adapt to those different clients, and it's keeping the message really clear. When there's 1,000 different messages about the same thing going on, what's the voice of truth? And that's where, as an industry, we can actually be really good at coming together and working in collaboration, but unintentionally we sometimes like hit each other on the head a little bit by the same message being said in 10 different ways, getting to 10 different answers. So I think it is very much from a first-time buyer point of view, the industry messages, the door is open. Like, we want to help you. Like, first-time buyers, you can get on the ladder. It's about speaking to somebody.
Yeah, no, thank you. No, it's a really important message to let everybody know. Second poll is live, and funnily enough, it's almost as though we've planned this. The second poll is about financial education in the curriculum of schools. So, please go into the polls and start answering that one, and we'll close that in a couple of minutes. So, gonna sort of go on to, I suppose, sort of the criteria side of, lenders, and is there anything more that sort of lenders can do to help maybe people that are either not being served or struggle to be served? So, David, in terms of, what do you think would make the biggest difference? We talked about LTVs and allowing sort of smaller deposits, in terms of flexibility of criteria. What do you think, could be the next thing or things that could, help a few more borrowers own their own homes?
Well, if you ask a broker, they'll say all of those things. I think, if you don't ask, you don't get. Do you? So, which Richard won't thank me for. But actually, I think in terms of to touch on some of the points Richard's made, clearly, if we've got more higher LTV products that can accept more varied types of borrower, that's a great message to be getting out there. But you have to couple that with the clarity of who's going to qualify for that and the decisioning. And I think one of the things that Richard touched on is how they've taken control of, who are we going to target, what's going to get through and be accepted with near prime, and what's perhaps beyond that and should be stepping across into a different segment. And I think the more that we get clarity around that, the easier it is to go back to your point around the media, the easier it is to get those messages out in the media, because it's such an individual situation that it's very difficult to just put down in 2-3 paragraphs. And everyone's situation is different. But the more lenders are making it clear about who they're looking to help, the better that becomes. And Atom, by making automation part of this process, makes it feel like a very sort of mainstream process. This doesn't feel like you're stepping into, the world of quills being run over individual cases to try and reach a decision. This is still going to be a really quite smooth, automated, quick process and answer.
No, thank you. And Rachel, sort of your views and how important that's, going back to sort of Richard's points about the automation as well. I suppose it always used to be, a quick no is almost as good as a quick yes.
Absolutely. And I think that's like one of the first things that needs to be applauded here is that ability to get that certainty. We talk about speed so much in our industry. What's speed actually about? It's actually that certainty, that client having the confidence in what they can do. All the data, all the stats that Atom produced, MAB produced, and other lenders and probably L&C have produced and so on say this is the new norm. So why do we make it so difficult? Why should it be so many jumping through hoops? From a proposition point of view, and this is where I could make some really good friends potentially and some big enemies on the broker and lender part, is we talk about the buyer a lot and high LTVs. We need to then take that across all of the property side of things, flats, new build, and so on, because actually these are historical rules. You need a higher LTV for them, and then factor in more of the human aspect. And the one that I love at the moment is interest only. Like, why can't a first time buyer have a high LTV interest only for a set period, or look at different options to help them whilst they're getting on the ladder? We're happy for them to spend thousands of pounds a month on rent for no return, but we get very nervous about a high LTV interest only first time buyer on an everyday first time buyer income. And I think this is where, as an industry, and I would Atom, please come speak to me about this, any of the lenders as well, is this are where we need to be looking at, because deposits, affordability, all these things have been talked about for so long, and we've seen some things move, and I think that direction of travel is already happening. We now need to start really looking underpinning everything, going, actually, who's the first time buyer today and tomorrow, and why can't we do these things?
No, thank you, Richard. Without giving any secrets away as to your future plans and products, because hopefully we'll be doing some press releases on them at some stage. So let's not give the game away quite yet. But in terms of sort of where you're looking as a bank and sort of those sort of customer profiles, where do you think sort of the next the sort of the next enhancements could be, whether it be for yourselves or the industry as a whole?
Yeah, I mean, I think we're very committed to this area of the market, and we're trying to use all the insight and tools available to us to really broaden access. So, get more people into the mortgage finance and home ownership as possible, really. So we're going to look to diversify our proposition as much as we can to do that. And yeah, we'll really continue to challenge ourselves on the historical norms that Rachel alluded to there around, should we have a different appetite for high LTVs depending on the property type, possibly not. And again, we try and set ourselves the challenge of not differentiating our proposition too much between our prime and near prime. So I think that will continue to condition what we do, but we're very sort of acutely aware of the challenges that remain focused on affordability and the ability to save for a deposit. So I think those are two aspects that will condition our propositional development moving forwards, really. Same time, it's trying to do all we can as well, just to help customers navigate the challenging sort of interest rate environment that we operate in today. And I think we're doing a really great job across lenders and brokers and sort of helping customers through that as much as we can. So I think those are going to be the conditioning factors for how we look to improve our offering moving forwards.
Thanks, Richard. Well, unbelievably, we are now entering the last 10 minutes of this webinar. So that has flown by. So I'm just going to sort of try and sort of wrap things up and obviously ask the panel in terms of sort of their views. But one of the things that we've kind of touched on a little bit is about sort of with all the fixed rates ending sort of this year. What do you think brokers should be doing now to help near prime clients, or those that they think could be near prime clients, get ready for a remortgage? I didn't actually aim that at anybody, did I? So let Rachel, let's go for you first.
Okay, perfect. So like with any client, they should be speaking to them way in advance. So you've got two parts to it. So those that are coming up immediately, as in within 2026, they should already be speaking to them and in communication, because you'll have clients that were in the near prime that might have moved out of near prime. We might have had clients that were prime that are moving into near prime, or even into a more dire situation. So that communication is key, having a conversation and really looking at what they can do to support them. As we've alluded to already on this call, things change quite quickly in our industry and not always for the positive. We don't know what's going to happen with those rates later on. Let's do what we can to support and give that client the certainty of costing. But the longer term picture as well, staying in contact with your clients, whether they're coming for renewal this year, next year, or in 5 years' time, that communication has to be consistent, because what you'll find is actually if you're speaking to clients throughout their journey and throughout their products, actually is an area where you could have done some debt consolidation to stop them going into arrears, to have helped them with their affordability, to have had a different conversation with them, and actually preventative treatment in there. So as always, communication, what are you, your firms, the companies you work with looking to support you in that as well? Because again, the broker is probably the most busiest person out there in our industry, where they are spinning everything from getting a client, nurturing a client, submitting applications, chasing applications through, checking rates, doing all this. This is where things like AI and the tools that AI can provide can support. It's not to take away from the human element, but just to give that human broker the ability to actually speak to clients that they need to when they need to, and keep it a consistent message, and that the clients know that they've got them at the end of the phone when they need them.
Yeah, no, absolutely. David?
I totally agree with everything Rachel said there. To be fair, there'll be a lot of people who have already got on the phone because of what's happened in the last 6 weeks. They'll be looking to bring remortgage transactions forward. We may therefore just brought business through a bit sooner. Massive rush in March, as many on this call will have experienced. And whilst I think that will continue for some time, we may find that there's actually a lull as a result. And that's the kind of time when you can think about, well, what do I need to be saying to people I will be talking to about next year? What kind of pressures are they going to be facing in the interim? And how can all of these different elements, whether it's directing them to the source of their credit file well in advance, just giving little top tips along the way on how you can boost your score. Those are the kind of things that can help in just getting ahead of the problem, but also being very much aware that we are going to be seeing more people who've had blips along the way. I just think that is inevitable as we head towards the end of this year. Higher energy costs are going to hit again. People are going to be finding it tough along the way. So awareness of near prime products and the way that you can cascade customers that aren't meeting mainstream lender requirements through into the next best products. That's going to be as smooth a journey as possible, is going to help those customers try and adjust to the impact of that.
Thank you. And Richard, in terms of what do you see sort of coming out to the rest of the sort of 2026, and what have you seen so far? I know sort of David sort of alluded to, some people, people have front loaded a little bit in terms of sort of taking advantage of sort of lower rates and maybe remortgaged a bit earlier than they were intending. So what have you guys sort of seen so far?
Yeah, I think David and Rachel hit it on the head. Really, early engagement is key. I think on this, we allow customers to apply for a product transfer with us 6 months in advance. So, providing a good lead time to get ahead of it and give the customers some optionality on their options is important. But I think getting ahead of it is going to be key, really. So we're seeing good levels of interest on product transfers, as you would expect, and despite some of the challenges, we're continuing to see a really good proportion of our near prime customers qualifying for prime products at maturity. So around 2/3 do qualify for a prime product, which I guess is a silver lining to the cloud that's been presented of ongoing cost pressures for households. Well, actually, sort of managed in the right way, customers can continue to transition to better outcomes, with good conduct through their initial deal. So we're continuing to be pleased with that, and I continue to see probably PTs take precedence over remortgage in the market at large. So I think the current conditions will continue to see that trend develop.
Thanks, Richard. Well, just to remind people, the final poll is live. Do you think you'll be advising more or less customers on near prime or similar products in the rest of 2026? So please please vote accordingly. So look, so it's a sort of a wrap up now, really, sort of conclude sort of final thoughts in terms of sort of near prime and generally the market as we see it. We're now scarily in May tomorrow, so soon be retired. Fantastic. The way time is going. So, David, in terms of what you expect to see for the rest of sort of 2026, your crystal ball, please.
Well, I think brokers obviously are going to play a massive part for borrowers, which is a great opportunity for us to help customers, because I think it's been a roller coaster for the last few years. That's going to continue through the course of this year. I think it's very difficult to call at the moment, and we almost have to prepare customers for the worst and hope for the best. But there are going to be more hiccups along the way. If everything feeds through, we can hope the best case scenario. But if it's worse than that, there will be hiccup feeding into borrower profiles, and so near prime I can only see becoming a bigger sector.
Thank you, David. Rachel.
Clients have already spoken and they want to work with a broker. We've seen that year after year that's grown. So the main thing for myself is to any advisors, brokers on here today is take the time to keep yourself up to date with knowledge on things that are becoming the new norm. So when we're seeing more near prime clients, whether it's first time buyer, home movers, even in your landlords as well as retention, stay up to date with those areas. Speak to those lenders you maybe haven't been familiar with or you haven't spoken to ever before. That's absolutely fine as well. Where are those opportunities? The people that you know really, really well, it's great that you know the proposition, stay up to date, but you're probably going to find that you're going to be using more and more lenders and diversifying your lender spread. And that's where it's so difficult in our industry to stay on top of that. But give yourself that, make it acceptable. You can take an hour out here just to go and upskill yourself and learn something new that's going to help you help more clients. Because at the end of the day, that's what everybody wants to do here, is help more clients get on the journey or stay within the journey.
No, there's great points. Richard, I'm going to end with you.
Yeah, I think we said similar things on the back of the last near prime index. The growth has come through that we expected. I think that will happen again. I think there'll be growth through organic means. The themes that we've talked to at length on the call will drive that organically. I think there's a role for an opportunity for brokers to actually proactively grow the area of near prime with educating customers, being alive to the flexibility that certain lenders will offer in this space. And yeah, I think it would be a fairly sort of buoyant area of the market over the next sort of 12 months and beyond. So we'll be doing our part to help sort of ignite that demand and service it well as a lender. So yeah, hopefully sort of in 6 months that will be the case. And yeah, we'll be sort of reporting on it in due course.
Thank you, Richard. Well, first of all, let me thank everybody that watched and listened to this webinar. So really, really, really appreciate it, and I hope you got a lot from it. Let me thank Rachel, David, and obviously Richard for being our panelists today. Now I hope everyone can enjoy the sun. So thank you all, and I hope to see you soon.